All right, now it's recording. Okay, there we go. All right, so sorry about that, guys. Just some growing pains here with the new desktop, so it should be working now. We should be recording. So yeah, we're going over a lot of topics in this class. So mainly just gonna be talking about technical analysis, as it is like looking at charts is a major part of becoming a trader, right? If you're day trading, you're pretty much not like sole focus is looking at the charts. You're looking at like the longer time frame, the daily, the hourly, trying to get a picture of the broad economy, and then you're basing your entries based off of price action, right? The quick up and downs that happen on the 5 minute or the 1 minute will be then your entries and your exits, and that's pretty much the soul of your trading, right? Identifying previous patterns that will likely play out again, assigning some risk management to it, and then looking to see how the trade progresses, right? And then for swing trading, you're also looking at the charts, right? If you have your fundamental checklist, right? I'm pretty sure if you guys are watching the Trade Alliance course, or even if you look at any sort of major trader, right, they have kind of their checklist of major fundamentals they go through. Do they have earnings growth year over year? What's their return on equity? What's their debt to equity ratio? Right, for us, if you follow the Cansom strategy, we're looking for that EPS rating above that 80 level. For me, also, I look for good SMR rating as well as accelerating revenues, right? And you kind of have that fundamental checklist that then makes the company suitable, but you're basing your entry off the charts, right? Like what kind of basing pattern it's giving us. Is there going to be tightening price action? So a whole wide range of concepts that is used by kind of a wide spectrum of traders, right? And it's not the sole thing, right? A lot of traders also, can trade based off fundamentals. They trade mostly, mainly off price action. There was also a time where technical analysis was seen as gambling as well, right? Not a lot of people believed in it, and kind of more believe so in value, right? They undergo their formulas, and if the formula that they're coming out gives a result where the stock is undervalued, then that's what they'll base their purchases off of, right? They didn't really believe in technical analysis. But I think now with the growth of like computers, with the growth of technology, with how fast information is being transmitted, you have to use charts in some sort of capacity. So pretty much in this class, I'm just going to go over the main technical analysis concepts that I use, that I picked up over my years of trading, right? Looking at candlestick structure, looking at support resistance, order blocks using demand zones, supply zones, fair value gaps. And then for like swing trading, kind of relying on concepts like from Mark Minervini, as well as from how to make money in stocks, right? Looking at those moving averages to determine when stocks are in that stage 2 uptrend, when there's that point of supply and demand tightening, to then look for entries based off of that as well. So kind of using all regards. Again, for me, I'm not really a math person, right? I don't really like the statistical. So a lot of these stuff that I use, I don't really dive too much into what is the math or what is the knowledge behind it. Rather than, getting too caught up in all that, I look at basically, okay, this is what the indicator, this is what the chart is telling me. How can I infer on previous patterns on, what price will do, right? And that's kind of basis of what I use for a lot of my trading. So we'll get started here, and then afterwards, again, even if during the presentation, if you guys have any questions, again, this is an open discussion, so you guys can jump in if you want to ask me to go over something in more detail, or if there's an indicator or something that I didn't talk about in today's session that you want to talk about. If I have any knowledge of it, we can go over that as well, right? So basically, I'll start off with what I use the charts for day trading, pretty much how I go through it, whatever my day trading process is, and how we determine my entries and my exits, right? So a lot of members here, a lot of you guys are already members in the gold section, so a lot of you guys already know pretty much what we do on a day-to-day basis, how I pretty much go over in the live section from that 8:30 a.m. to 4 p.m., pretty much going over what my strategy is, right? Talking about the price action, the structure, the volume, the supply demand that's happening in real time, looking at the market internals, right? So all that stuff, pretty much using in conjunction to determine high probability setups, right? So we'll go over one by one each of the things that I use in a bit more detail. And again, this will be a bit more a lot of information at once, because I do use a lot of different things in my trading. As you guys know, like I use the order blocks, I use simple price action, I kind of use the algo snipe indicator, the market internals. I use that all in conjunction to give me those high confluence setups. So it is a lot at once. So again, you can always watch over this video, and if you guys ever want anything in more detail, you guys can always reach out to me as well. So we'll start off by using this example on the S&P 500 spot prices. So this is the SPX index. I never really charted the SPX, so it is a kind of a clean slate here, and we kind of can go over it together pretty much what the process is, right? So Pretty much the first thing that I rely on, or the first thing that's part of my trading, is just simple price action and volume, right? Those two things together can provide you a lot of information because it tells you pretty much in real time where that supply and where that demand is coming from, what is actually happening with the chart, and giving you that indication, right? So there are a lot of traders that rely solely just on price action and volume because it does tell you a lot of information, right? So how you can infer price action, again, there's so many different types of ways. One way is depending on the chart that you use, right? So for me, I like to use the candlestick structure chart because I think each candle on its own gives a lot of information about that specific time frame. And when you use it in conjunction with other candles, like the one before, the one after, it can also tell you, really indicate where that, if demand is coming in or if that supply is present, right? So a lot of information in just the candlestick structure, but there's so many different types, right? If you use one candle structure that I used to use back in the day was Heikin-Ashi, right? And Heikin-Ashi candles are calculated a bit differently, but they're a good indicator of trend, right? If you see consecutive green candles pushing to the upside, that can show you that the trend is still bullish, so you continue to move with the trend, and right. And if you get consecutive candles on the red to the downside, that can show you that trend is bearish, so you get the move lower, right? But for me, I like to use candlesticks, and pretty much the main way I use them is determined on the strength of the candlestick and what it's telling me, right? So for example, when you see green candlesticks like this, where you get a heavy body put in and not that many wicks, that tells me that in this time frame, right, on the daily here, this was on June 23rd, right, when we had the ceasefire announcement, we got that bullish reaction. Well, that's telling me that, okay, we got a bullish reaction off of news, and we're getting a pretty heavy candle here to the upside as well. So this is positive and telling me that, okay, in the next candle, I'll be looking, as long as we hold above this, the price to go up, right? And this is one way to use kind of that the price action to determine that, right? Another kind of commonality, kind of just the two major candlesticks, is when you see those big bodies, that shows that high conviction in that direction. So again, big body green candle shows me conviction that there might be movement to the upside. But the other type is kind of these indecision candles, right? These dojis, right? And in the doji, you pretty much get small bodies, you could get lengthy wicks, and what that tells me is there's indecision, that when price kind of had this push up, now at this point on this day here on May 20th, there was some indecisive action. Some sellers were coming in, maybe they're taking profits, some supply was coming in, maybe sellers were getting like, okay, price has been extended, has to push to the downside, or buyers are trying to hold it up at the same time, right? There's some indecisiveness going on. So when I see that action, okay, that can give me a signal, okay, maybe I can sell, close my position, or maybe even look for the follow-up candle for a potential reversal if it's, meeting other conditions. Is it hitting an area of resistance? Are we seeing, weak structure in the market, right? So I use a bunch of these things in confluence. I'm never just relying on price action alone, but again, it could tell you a lot about what, which way the market wants to go, right? One analogy that I use just to kind of get that key on what price action is telling me is like the steering wheel of a car, right? It pretty much, if it's turning left, market wants to push higher. Okay, are we getting indecisive dojis at support, lengthy body green candles that are saying that, okay, the car is turning, that is pushing to the upside? Or are we coming to a resistance, getting some indecisive dojis, and then a heavy red candle showing that selling is supply is picking up to the downside, right? And that's kind of oversimplified technique. Another good concept that I used to kind of get a bit better understanding of price action is strat combos, right? And strat combos are pretty much this concept. I forgot who developed it. It was Rob something, but pretty much he put candlesticks into three different types, right? One is your big body candles, which I mentioned, that show that volume to the upside. The second was the inside candles, which I mentioned with this doji here, kind of moving to the downside. And then the third was kind of your directional candles, right? So for example, here, we had kind of a heavy move to the downside, right? So this is showing heavy direction to the downside, but then on the subsequent candle here, you got a big body to the upside, showing a directional change, right? So showing that kind of buying pressure was coming in, right? So another example would be this example here, where you kind of had strong body candle push to the upside, some indecisiveness, and then this would be the directional candle pushing things to the downside. So looking for those kind of three types, right? Either one type showing that heavy body, showing the indication of trend continuing in that direction. Second, the indecisiveness, the doji, kind of showing that there's indecision, that there could be potential for a reversal or a turnaround situation. And then the third is that huge directional change, right? Where you get a big body candle going one direction, and then a subsequent big body candle going the opposite direction, showing possibly a sharp turn, possibly a V-shape type of move. So that's pretty much what I use for price action for. Again, just simply looking at the candlestick and then volume, right? What is the volume that's telling me on that candlestick in that time frame also showing me that conviction, right? If we get a kind of a big body candlestick, but it's not really happening on strong volume, then that's kind of a weaker indication that buyers might be present, right? We're kind of getting that kind of action now here where we're seeing prices kind of push up. We're getting these green candlesticks, right? We're seeing price want to push higher, but it's just happening on low relative volume, right? We're not really seeing strong strength in these candlesticks, so it doesn't really show us a huge confidence that the trend is going up, right? Still bullish, right? Still green closes. The price in that time frame did move higher, but just not with much conviction or much volume to show that it could sustain at those levels, right? So that is price action and volume. That's pretty much how I use it. Again, a lot of concepts, but simply just looking at the candlesticks, right? Just candlesticks alone do tell you a lot of information. There's also those common candlestick patterns as well, and I'll dig through the education channel for that cheat sheet. But again, a lot of common patterns that we use, like bullish engulfing, reversals, bearish engulfing, right? For example, this would be a good example of a bullish engulfing as well, where we had kind of price trying to move to the downside. We got subsequent red candles. Then we got a green candle kind of encompassing that previous candle, showing that there was strength from buyers, and this could have been a nice trade, right? Good follow-up from that ceasefire announcement that we had June 23rd. So again, this is a good example of how we use kind of that price action, how we use volume. Also, I use price action on the multiple time frames, right? So kind of for day trading, right? I'll get the kind of broad market perspective, the broad view of what's happening on an intraday or daily perspective. As you guys will know in the member section, every morning in the market updates, I'll share pretty much looking at the hourly, looking at what happened in the overnight, what kind of, are we getting higher highs, higher lows, right? Trend is also very important, right? If you're getting kind of higher lows put in. So for example, this would be example of a swing low, right? So if this was swing low here and you get a higher low and a higher low, well, this is indicating that trend is to the upside, that the market is bullish, right? And if you're getting kind of swing highs here that are kind of moving in the downwards direction, right? A lower high, lower high, lower high, lower high. Well, this is telling you that trend is to the downside, right? So by looking at the trend, by looking at what's happening in the hourly and the daily, I'll kind of get a broad market perspective view of what's happening. And then from the intraday, I'll look at the 50-minute and the 5-minute time frame, because that'll kind of provide my roadmap, right? From an intraday, what is happening with price, right? And then my entries will be based solely off the 2-minute time frame, right? So kind of using that microscopic view, right? By looking at the longer term perspective, what is happening, and then getting really granular into the smaller time frame charts to really determine my entry, my exit, right? And a lot of times you can use that 50-minute as a roadmap. Like let's say, for example, you see a reversal taking place on the 50-minute time frame or the hourly time frame, then that can give you that conviction to maybe hold on to that trade, right? Because maybe you're not going to see price move up in a straight direction, right? On the daily here, you can see that we had kind of price moving up like this, kind of in a straight line. But if you zoom into the hourly, you can see that it's not really a straight line. There's a lot of ups, a lot of downs. If we zoom in further, take a look at the 30-minute, you can see that there's even more ups and downs. And if you the further you go in, right, looking at the 5-minute, even more, right? So the more granular you get with the charts, the more up and down there is, because price doesn't move in a straight line, right? There's a laws of demand and supply. There's a lot of human emotions that take place, right? So that leads to a lot of choppy, sometimes sideways, sometimes trendy type of action, right? So the further down you go, the further difficult to be, to get that basis. And it's crazy. Like I see some people like online that will trade all the way down to the 15-second time frame. That means each candle just representing 15 seconds, and they'll base their entries and exits because they're going to be hyper scalping, right? They'll be in positions from like less than a minute trying to get big gains. And in this market, with the assets that are available to trade on the US exchanges by, trading things like futures or options, extremely risky, but there is that potential for return in that short time frame, if you can get good at, reading charts, if you have that edge in the markets. But that's pretty much, again, how I use price action, by zooming out to the longer time frames and then scoping in to see what's happening on a granular basis. And then for swing trading, if I'm focusing more on those longer term trades, again, I use a lot more indicators, which we'll talk about in a minute. But in terms of just sold charts and price action, I'll use the weekly time frame, the daily time frame, and then I'll zoom in by looking at the 4-hour time frame. All right, so again, the weekly time frame is really good because it lets you provide, again, looking at the market from a longer term perspective, okay, to see what's happening on a larger scale. Are we in an uptrend? Are we holding above some key levels? Is price kind of continuing to push higher? Are we seeing a bullish pressure from a week to week basis, right? Because the daily does tend to be a lot chop, and again, just depends on your horizon, depends on how long you're looking to hold that trade. If I'm looking to hold for several days, then yeah, I'm be looking at the weekly to get that longer term perspective, and the daily to kind of determine what the trend is looking like, and then the 4 hour for my entry. If my goal is to hold a trade for like a minute or a couple minutes max, then I'll be looking at the hourly, I'll be looking at the 50-minute, and then I'll be looking at the 2 minute for more granular entries from there, right? So the time frames are important, right? They do help, and kind of when you see that confluence, like okay, the 50-minute is giving me bullish uptrend, the 5-minute is giving me bullish uptrend. Well, then I'll be more confident in taking long trades when I'm looking at the 2 minute time frame for my entries, right? If I'm getting more, maybe chop indication, okay, the 50-minute is kind of holding in range. We're seeing the 5-minute also kind of hold in between the range. We're not really seeing, those higher lows or higher highs. We're kind of seeing equal highs, equal lows. Well, then I'll be looking more for rejections or reversals and maybe quick in and out entries, right? It just depends on what the longer time frame is doing. Will also guide, what I'm looking in terms of price action, okay? So in price action and volume, again, simple analogy, just look at the car and the steering wheel, right? The car is trying to get up the hill. Which way is it steering? Is it taking us left? Are we going up? Or is it taking us right? And are we going to the downside, okay? One other concept that I use, also trying to kind of gauge, what market is doing based off of price action, is order blocks and fair value gaps, right? So order blocks and fair value gaps isn't a concept that I've invented. It's by some guy named, a concept by Inner Circle Trader, ICT, very widely popular known. Now, I think he really started, when I first heard about it, it was a couple of years ago, like 3-4 years ago. But since then, he's really grown to like have a very wide following. And I'm never going to knock any strategy, right? I think any strategy has its uses. A lot of, what I talk with you guys today might not resonate, right? It depends on your own psyche, your own psychology, what works for you, and how you implement it, right? So a lot ICT, his concepts works for a lot of people, and if it does, if you want to check it out, you can as well. For me though, it was just a bit too much information, right? A lot of the concepts that I've learned like since way back in the day, because I've been kind of trading for a while, is he kind of just renames them into different concepts and uses them a little bit differently. So for me, it just didn't work out. It didn't match my psychology, but I do like his concepts of order blocks and fair value gaps, and I kind of like using them as areas of supply and demand. So what is pretty much order block? What is a fair value gap? So an order block pretty much is an area on the chart where you're seeing a huge push up in price because at that moment there was like a large demand that came in, right? So pretty much to think about it in kind of what actually happened in the market is, say you have a large player, right? Like a huge financial institution, a large bank, a hedge fund, to them, we're kind of peons, right? We're trading in like thousands, sometimes hundreds or thousands of dollars, right? But these big time players, they're dealing with millions, tens of millions of dollars at a time, right? So when they try to enter into the market, when they find a stock that they particularly like, or if they're trying to get into the major indice as well, you'll see that impact on price. You'll see that, when that order comes in, that you'll see a huge move up in price action, right? And we can tell you just visually here on the chart by looking at the daily, you can see that these huge areas where price came in and saw a massive push up. Well, this could have been a huge buyer, right? A huge buyer came with demand. They don't care if they get in at the bid price. They don't care if they get in the ask price. They're just looking to get into the market, right? So they can get into huge order, submit that, they want 100,000 shares, whatever, and they'll put that order into the market. And then, the day traders or the general market will then catch wind of that, right? They'll see that order come through. They'll see, okay, based off their theory, like, okay, maybe you got an inside candle. They're looking for a bullish push up. They'll start to tag in on that order as well. And then what ends up happening is that huge order comes in. It doesn't get completely filled, right? So let's say that they want to buy 30,000 contracts. They want to buy it at this price here at 54.60, and they want to hold it for a couple times, right? For us, for day traders, for swing traders, momentum traders, we're not looking to hold for that long, right? Couple days, couple weeks max. But these traders, they're looking to hold for a couple months, right? They're looking for long term down the line, and that's because a lot of these hedge funds, they have like their portfolios that they're made. They usually have to work for a certain client base, guaranteeing a certain amount of returns, right? So their investment projections or their objectives, are just a bit different, right? So, but for us, we're trying to get that quick in and out, right? So they kind of get that huge order, they'll put it into the market, and then as we're kind of tagging onto it, you'll see that kind of this has this huge push up in price. And what ends up happening is all their orders don't get filled, right? So let's say they want to put in 30,000 contracts, but only 15,000 will get filled, right? So what happens is that then this area becomes kind of an order block. It becomes an area where I'll be looking to see where if price will come back down again, will it act as an area of support, right? So how I mark the order block And what I'm looking for visually, kind of that was kind of the background understanding. Visually, what I'm looking for is these kind of spaces in between the wicks, right? So on this candlestick structure here, we had this huge push up, and we had these three candlesticks, right? And then on these three candlesticks, you can see that on the bottom of this candlestick, there was pretty much no wick at this level. So if I just mark it on the chart, right? So there was no wick at this level. And on this chart here, you can see that on this candlestick here, sorry, on the high, you can see that we had kind of just a baby wick, right? And in this kind of move up, this parabolic push up in price where, you can see that visually heavy demand came in, right? In this kind of short amount of time here on these 3 days, price went from 5,500 all the way to 5,600, right? So obviously there had to be that demand. There had to be a big push up, creating that move here higher, right? So once you see that visually, you kind of see that the space starts to form in between the wicks, in between these candles, right? And this space is called the fair value gap, right? How I use fair value gaps to talk about in a minute, but it's an area pretty much created by that space in between those wicks. It could be also an area that you just mark as a point of interest, right? If prices come down, it could look to act as a support, and if or as a resistance, depending where it is on the chart. But first, identify that fair value gap, and then I see what's happening before that gap happened, right? So if we look at these three candlestick structures, okay, we got a nice push up. So what happened before that? Oh, we got a reversal, right? We got a kind of heavy downstick candles coming in on the September 6th on that Friday. Then we got an inside on the Monday, and then we got a reversal to the upside, right? So this showed me that this parabolic move here was caused by this sort of base setup. So then in that base, I'll kind of mark what the high and the low of point of interest was, right? So this candlestick was that point of interest because that's what caused the shift to the upside. So I'll mark the high of that candle, this 54.84, and I'll mark that, since it's below price, I'll mark it as a green demand zone. And then I'll mark the lowest wick in that base structure as well. So that'll be this 54.04, right? And then I'll draw a rectangle in between that space, right? And I'll just make that green as well. All right, and this will be a demand zone because in this area, this is where a heavy buyer came in to push price to the upside. And I'm expecting that, okay, if price were to come back here, it would act as an area of support, right? This area, now that it hasn't been tested, it's called mitigated. It's called unmitigated, meaning it's being untested, right? Meaning that order is still there, that it could act as a strong area of potential support, right? So then if you kind of further down look to see what happened, you can see that kind of times when we entered near that area, there was kind of a push up, right? They did act as a potential area where we saw prices bounce, not once, but now twice. And then once it got weaker, once it got mitigated, once that, those orders started to get filled at 15,000 and 30,000, then it became a weaker area of support. And then we kind of got a heavy breakdown, right? So that's pretty much how I identify demand zones. Again, looking for those fair value gaps, that strong push up in price, right? Seeing where that gap develops, and then what happened before, right? If you do see kind of sometimes a doji, let's see if I can find a good example here. Right, so it's not the best example, but let's say something like this, right? Where you're kind of seeing a strong push up in price, right? Say there was a fair value gap that developed here, and you kind of saw this doji was the reason why it created that fair value gap. Then I just simply mark the high and the low of the doji, right? So I'll just mark the high and the low of the doji. I'll draw my rectangle, and then that'll be my fair value gap, right? If I'm seeing something like this, where we're kind of getting that fair value gap, right? We're going to get the space between the charts. We're getting a strong push up in price, and we guys going to get a basing pattern developing. Then my point of control, or the kind of areas where I mark the high and the low, will be dependent on where the most kind of point of interest are in that base, right? Point of interest being like on each of these candles, where's the high, the low, the open, the close, right? So in the basing area, where the most intersections with either the high, the low, the open, or the close is where I'll put my point of interest. So it is just visually. I do also say that technical analysis is more of an art than a science, right? If I'm looking at something on the chart, you could be looking at something completely different on the chart, right? It doesn't really have to coincide, right? There's no one chart fits all. It really, everyone's eyes are different. Everyone's looking at something different as well. Everyone has a different sort of bias. So that's why, it doesn't always line up perfectly, right? So if you're seeing a zone that I might not be seeing, right, or I might be seeing something that you're not be seeing, there's always that difference in the charts, right? And also, not every level always works out 100% of the time. That's why we always have, proper tools like risk management, like looking at stops, and looking at, having our daily limits and stuff like that as well, right? Not every strategy, not every chart always plays out perfectly 100% of the time, but kind of going back into it. So again, it's looking at what areas kind of intersect the most, right? For me personally, just looking at it, I kind of see this area here, right? Because you have the highs of this candle, the high of this candle, coming into around the open of this candle, close of this candle, close of this candle, and the open of this candle, and the close of this candle, right? So for me, visually in this base, that's where I'm seeing kind of most points intersect. And then my bottom end of the rectangle would be wherever the lowest point is, right? So inside this base, this is kind of the lowest candlestick here, so that'll be kind of my low point, okay? And then that'll be another demand zone, right? So that's pretty much how I identify those demand zones in those charts that I share with you guys. Again, if you remember, every morning I do this on the ES, I do it on the NASDAQ, I do it on crude oil, and I do it on gold. I pretty much do it on the futures contracts because I find that technical analysis works better on ES versus like your spot prices. But that, again, that's just how I do things, right? So if you guys remember, make sure you guys check those out. And then also the weekly, right? I take a look at the daily, the weekly time frame, and that's more for a swing trading perspective. But again, hopefully everyone got this concept, pretty much demand zones, supply zones, and then just looking to see if they're mitigated or unmitigated, right? If they're untested on that first turnaround, I'm looking for them to act as an area of support, seeing, you know, if we get some sort of action where, let's see if it played out here. Actually, no, this was pretty far down in price, but let's say, for example, price came back down, right? And we were kind of seeing this kind of action where prices kind of came back and it started to come back testing this zone, right? And from then I'll be looking to see, okay, what is price action telling me? Are we seeing some indecisive doji start to form? Are we start getting some, maybe a heavy reversal, maybe a green candlestick came in right off the bat? And if we are, then I'm looking for that reversal, maybe taking a long trade to the upside, right? If we're getting some weak sectors, like say we got this type of candlesticks down here, then that'll give me more confidence in a long setup because, okay, this was an area where buyers came in previously. We're seeing that indecision happen on the candlesticks, on the price structure. That's giving me better confidence for my trade to the upside. All right, so it kind of makes sense. See how I'm like kind of using all this stuff in conjunction with each other to give me kind of those high setups. I'm not looking for, you know, catch every single trade. I'm not looking to catch, you know, there are going to be trades that I miss by looking solely on these areas of interest, but that's okay. Like I'm not looking to get every trade, right? I'm looking to see when my setup is going to be in play. That's giving me that high probability of success. So then that's what I'm going to take the trade according to what I see, right? So that's a bit about demand zones. Let's talk about supply zones, right? So pretty much the opposite concept, but very similar, right? So for example, let's take a look at price action that developed here, well, right? So here we kind of got that fair value gap to the downside, right? We got three red candlesticks showing heavy selling taking place, meaning that at this price point, a big player wanted to sell. A big player came in, put in that supply into the market. They put in the contracts because they wanted to offload their position. And we could see that visually represented by these consecutive down days that we had on the chart, right? And we could see it here visually because on these three candlestick structures, we got that space in between the chart, right? I'm going to label it here. We got the top of this candlestick being the, and the bottom of this candlestick. And this would be our fair value gap here between this 50.80 and this 51.08. All right, so we got the heavy down push in price. Okay, what happened before that push down? Okay, we kind of got this basing pattern here, right? We kind of got a bit of a base. Price tried to push up, held within range, developed a box, and then we saw that push down, right? So what we want point of interest, pretty much seeing kind of visually, okay, where most points intersect inside this area. Okay, well, kind of visually, I see this area here because it's the low of this candle, the low of this candle, and the close on the open of this candle, kind of coming into this area here as well. So just visually, again, I see something different. You could also see something different, right? That's kind of why I see technical analysis, again, as an art. So you see here, that could be the area of resistance. And then I mark that as a red candle. And then I just looking for the high of that base pattern, which will be this right here, right? And then that'll be my supply zone, right? So that'll be looking for as an area where price, when it comes to, do we see kind of rejection or do we see, you know, strong follow through, right? So in this case, we had strong volume, kind of invalidated it, but it does kind of lead to a nice concept I also like to use, which is that break and retest, right? So we kind of had this as an area of prior resistance. We kind of saw a strong break up in price, right? Could have been news based, could have been some sort of volume that came to the market, right? Not every zone always works 100% of the time. But if you kind of marked on the chart, you can see that this was a nice area where sometimes you get a break and a retest, where if the momentum is strong, where if trend wants to confirm with that price action, then you can look to see for that continuation, right? So on a kind of intraday charts, if I'm seeing this, like not so much on the daily, but on the 5 minute, if we're kind of seeing that break and then we're seeing a retest, and then we got kind of got this indecisiveness, right? We got a red doji putting in, but then we got a huge directional change with the green candle to the upside. And then when we held above that, we saw this nice move. So this could have been a very good long trade here off this break and retest setup, right? So that is pretty much the concept of order blocks, right? Pretty much using the demand zones, supply zones to look for areas where price might reject or where we could get a possible breakout play to the upside, right? And for supply zone, pretty much the concept is, again, pretty much the same, right? A huge seller came in, they came in with that sell order. Let's say they want to offload 30,000 contracts, right? But they just didn't fill, right? Because the market, momentum traders, swing traders kind of looked into get into for that short-term move as well, kind of leading it to jump their price. So then we'll look to see fill the orders when they retest that area. Okay. So that is the concept of order blocks and supply zones. Again, I'll use all these trades in my trading every day. I will update the charts. I pretty much, to identify the order blocks, I would start off by looking at the hourly time frames, and I cycle through the 4 hour, the 3 hour, the 2 hour, and the 1 hour. So pretty much looking at all the hourly time frames to identify, where are those fair value gaps, where are those big moves in that price action, where's that base. Okay, that'll be a zone, and set it up. And then I'll kind of zoom it down into the 30 minute and the 50 minute. Okay, I never use the 5 minute or any shorter time frames, just because the order blocks there are a little bit less, they have less strength, right? They don't encompass that much time, they don't encompass that much data, so that I don't find them to be typically very strong resistance levels, unless you're like, hyper scalping on the 1 minute or the shorter time frames, right? Again, it completely depends on your time horizon. If you're looking for longer term trades, you're using the longer time frames, you're using maybe zones on the daily, on the weekly. If you're looking for your intraday, you're using zones on the hourly and the 30 minute, like we do in the group. Okay. All right. So was there any questions? I know we talked about a lot there, price action. We talked about order blocks, but all this, again, just using past price action to identify that roadmap, right? This is just purely where that car is headed, where that direction. Is it turning left? Is it turning right? Are we going up? Are we going down? Right? But there's a lot more to technical analysis. But is there any questions? I know we talked a lot about stuff already. All right, no? Okay, cool. So then we'll just talk about the next concept, patterns, right? So patterns are also a lot of concept into technical analysis that we use for our trading, and just identifying like commonly used patterns, right? And patterns aren't something that we only use in our day trading, but also we use in swing trading, right? For technical analysis, a lot of people, again, a lot of members in the group know that we use kind of, or at least I use concepts from Minervini, right? So I'm looking for common technical setups like the W pattern, right? For example, we can see one clearly right here where we had kind of price pushing down. This could have been an area of prior support, for example, and we got kind of these equal lows, right? You got a low put in right here, and we got a low put in right here, right? So when you get those series of equal lows, you can put your, your trend line or your horizontal level right on that neckline, that's kind of the top end of that W, and then look for that breakout play to the upside, right? And this is a really good example of where we got that W pattern. We got a nice break and we kind of saw it push to the upside. But there's so many different types, right? If we go back, I show you, if you guys check out in the member section, if you guys check out in the research channel, right? We're kind of looking for identifying those patterns for our setups, right? So cup and handles, W patterns, double tops, our head and shoulders are some of the common types of patterns that I use, and also simple candlestick patterns like bullish engulfing and stuff like that. So I'll dig through the education channel, but we did share a cheat sheet prior there with some of the common patterns and how they're used, as well as the common candlestick patterns there as well. But patterns are also a big part of my trading. Support and resistance, also again just identifying key areas on the chart where price had a strong push up or had a strong push down. So just identifying those levels again, and I share those with you guys in the member section and the market updates every single day, and also just looking at key time frame levels as well, right? Marking the overnight high, the overnight low, marking the London high, the London low are some key areas that I look for, and also the prior swing highs, swing lows, right? You also have a lot of traders that, also a really good strategy is for day trading is looking at that 50-minute opening range, right? So if I kind of zoom into the 50-minute here, so what a lot of traders will do is they'll take that first 50 minutes of the market, they'll mark the high and the low, and then they'll base their future trades in that day based off that, right? And if you kind of look in 50-minute here, you can see that once you mark the high and the low, they'll kind of be looking in this area to see, okay, is there a rejection, is there a breakthrough, and that could have led to a good short trade. So there's a lot of time frame based levels. There could be a lot of visually based levels, right? If you're looking here, you have a strong push up, you got a swing low, so you can just mark kind of the low of that candle, and that could be potentially an area of support, right? Because looking at past price action, we saw that this was a strong area where demand had come in, where prices had pushed to the upside, right? So expecting that to be a strong area where price could potentially push up once again, right? So that is kind of the concepts. Pretty much again, technical analysis, just using past price action, trying to identify common patterns, commonalities that you can use to infer what future price action might or might not do, using risk management to, guarantee your capital, right? So that's pretty much the concepts, guys, of, again, technical analysis and how it's used. Again, a lot of this is not really so much important. You understand basically what it is, how it's derived, but how it affects price and how you can use it in your trading, right? Again, a lot of these concepts, right, are very abstract. They can be used in a variety of different ways, and it's important that you develop rules around them, right? So for me, like, I won't take any trades unless it's near one of these point of interest, unless we're seeing it hit a resistance level, hit a support level, or hit a demand zone, hit a supply zone. I'm not looking to trade in that black space, right? Because that's not my edge. My edge is when price enters into these zones, I'm expecting, because that's where it acted as a strong area before, to do so once again, right? So that is pretty much my edge, and that's the rules that I develop, right? And you can also see kind of in other things as well, with all these concepts, with indicators, with things like moving averages, right? If you guys are watching the Trader Line conference, right? I'm kind of the one that's going on right now with Peter Brandt. I kind of want to go back and watch it. He is a market wizard. He's been trading for a while. So again, just learning from all these different traders, you can see that they also have a lot of rules based off a lot of these indicators that they use, right? Mark Minervini, for example, will only look for stocks that are in a stage 2 uptrend, meaning that the price is above the 50-day, the 150-day, and the 200-day moving averages, right? So by looking at those rules, he identifies, commonalities, common patterns that he can then use to determine future price action, right? To look for those breakout types of plays. So that's pretty much the concepts that I want you guys to develop as well. Not only, this is a concept, this is what it is, and then, just apply the chart hoping that it works, but actually test it. Look to see, does it match with your psychology? Does it match with your specific sort of trading style, right? And the way you do that is by back testing, right? By putting it on the chart, looking at previous action, looking to see what actually happened, by using the replay function here on TradingView, and then by also practicing, right? Putting it in real time, opening up a practice account, and then seeing, does it actually work with your strategy? Is it actually giving you good returns, right? With a lot of these concepts that I'm going through with you guys right now, I started off by just looking solely at price action. Then when I started accompanying order blocks, I would kind of look back and test it, look to see what happened on the charts, right? Even now with swing trading, as I'm learning new concepts as well, going on Mark Minervini, like using his concept of that 50-day, the 150, that 200-day, I can trust it because in the books that I've read, in the examples that he's shown, I've seen it play out in real time, right? So I've seen it work out. I've seen it actually play out. It gives me confidence that it works on the future charts. So then that's why I can use like things like the 10-day, the 21-day, that 50-day, the 200-day moving average, which we'll talk about here in regards to swing trading. But in terms of day trading, again, it's very important that you kind of understand what the indicators tell you, as well as basis on how you can use it, okay, and how it kind of fits with your own psychology. So we talked about candlesticks, patterns, support and resistance. So again, all this exactly companies just price action, right? Pretty much determining where market might go. Is it holding into the uptrend? Is it a downtrend? Is it choppy? Where can we catch the entry? Where is there likely to be a reversal? Where is it like to be kind of that breakout, right? Some other things that I like to use on my charts for day trading, kind of we'll look at now my day trading kind of setup, right? So, and again, if you remember, you're pretty much used to kind of looking at these charts, right? This is the kind of granular looking at the 2-minute, kind of what I use to determine my entries and my exits, right? So I'll kind of go over some of these other indicators that I have and pretty much what they mean. Right, so the first thing that we use kind of on the short time frame is, we'll go over is VWAP, right? So VWAP is this level here, this purple line, and it stands for volume weighted average price, right? And I won't get too much into the math, but pretty much is taking the weighted price of past price action, going back a certain set of candles, and determining what kind of the average is of the most weighted prices, right? So it's pretty much determining an area where the most volume, the price level where the most volume is being traded, right? So the price level where the most volume is being traded. So sometimes in a choppy market where you're not seeing much volume take place or not much strength from buyers or sellers kind of moving prices, the volume weighted average price can act like a magnet, because that's where sort of the point of control is. That's where the market in that chop, in that kind of sideways action is finding value, right? So a lot of times when we're kind of seeing price choppy range bound action, I'll use kind of the VWAP as my midpoint. If we're kind of below VWAP, I'll look for rejections. I'll look for downside movement. If we're above VWAP, then I'll look for bounces. I'll look for upside, action to take place. If price, stays above VWAP and can hold above VWAP, then I'll be more confident in bullish trend because price is showing that, it's trying to push here above that average volume, right? That price is trying to hold above, that there's still demand coming in. And so, for example, if price is above the VWAP level, then I'll be a bit more bullish on price action. If price is below the VWAP level, then I'll be a bit more bearish on price action. I'll be looking for more downside trades, right? So just also kind of encompassing just as a strong area of support and resistance, and also determining kind of where the trend in the market is, where the strength in the market is, okay? So that's kind of the VWAP indicator. The other indicator that I use is the swing high, swing low indicator. And all this pretty much does is it goes back in price action and determines areas of swing highs and swing lows, right? So swing high mentioned is an area where, again, price had a strong push up and then it turned around and started going to the downside. So then it just marks kind of the high of that, where that previous swing high happened, right? And a swing low is where price is kind of moving down, pushing aggressively, and then it kind of turns around to the upside. And then it marks kind of the low of that pattern, right? And why I like to use swing high, swing lows from an intraday perspective is because it can really determine where prices could turn around or potentially give you that breakout depending where that strength is, right? If strength is a bit more bearish and we're coming into kind of a prior swing high, then I'm looking to see, okay, this was an area where on the short time frames, like on the 5 minute, on the 15 minute, and on the 2 minute, is where kind of price saw a reversal and where we could potentially look for a reversal or a breakout play once again, right? So that's what I kind of like to use it. Again, just another point of interest where we can look for that quick entries and exits on a intraday, on a day trading basis. Okay, so that's the kind of swing high, swing low indicator. Again, for the members, I forgot to do it last week, but I will post in the education channel now right after this lesson all these layouts. So you'll kind of get access to, if you guys are members, you guys can just copy the link, and then in the top right there's a copy function, and you can see pretty much all the indicators that I use, the VWAP, the swing indicator, and pretty much it copies my settings that I use as well. I do change the settings a bit here for some of these indicators, so again, you guys can get exactly what I use. And maybe if you're unable to look at the Discord, or if you're unable to look at kind of my live charts, then you can always copy it as well. Or as I'm always kind of cycling through the charts as well, so if there's something that you want to look at specifically, then you can copy it onto yours. But again, for members, I will share it, but again, this is the main screen that I use to determine my entries, my exits, right? So looking at the 2 minute, looking at these indicators here on the price action, and then on the bottom here we have TTM. So this is called the TTM squeeze indicator, right? And this pretty much is determining my momentum, determining is there gas in the tank, right? So pretty much how I use TTM, I'll use it with conjunction on the 5 minute and the 50 minute time frames, right? And again, another chart that I use is that multiple time frame. So I don't have it open here, but I can show you guys. So on a separate screen, I'll have this open, right? Where I'll have the 50 minute and the 5 minute for the ES, for the S&P. And then I'll have for the NASDAQ, the 50 minute and the 5 minute here as well, right? It's on the right side. And pretty much this is my roadmap, right? This is what I'm looking from a longer term perspective. What is trend doing? Is it uptrending? Is it downtrending? Are we in a choppy base, right? But I'll have the same indicators. I'll have VWAP on this as well. I'll have the swing high, swing low indicator. Sometimes the swing highs, swing lows on the 5 minute and the 50 minute work out a lot better than the short time frames. And again, just because they're stronger areas, right? If you're seeing a rejection on the 50 minute, that will just mean more because it encompasses more data, encompasses more volume than if you're seeing like a swing high or a rejection on the 2 minute, right? So kind of encompass the swing highs, swing lows, but I also have the TTM here as well because I'm looking for that confluence, right? I want all these TTM indicators, the momentum indicators, to show me that it's moving in the same direction, because then that indicates stronger trend in that direction. So I'm looking for example, if the TTM is all telling me bullish, then I'm looking for long trades, right? So how is it telling me bullish? How is it telling me bearish? What does that mean, right? So pretty much what I'm looking for, if you take a look at the NASDAQ here on the 5 minute time frame, if I'm looking for long trades, I'm looking for the TTM to be pushing towards the upside, right? I'm looking for these blue bars here, and that's telling me pretty much that the market is pressing their gas on the pedal, that they're putting their foot down, that volume is coming in on an accelerated rate here, and it is pushing prices to the upside, right? And if I'm seeing that kind of confidence, that's telling me, okay, now the 50 minute is looking strong. We're looking for those long trades, right? If we're kind of seeing these dark blue bars come in, it's still telling me that the market is bullish. It's still telling me that, the gas is being pressed on the pedal, but maybe the market is kind of letting its foot off the gas a little bit, meaning that we're not seeing the same amount of volume or the same amount of speed coming into the market as we did before, right? If it turns bearish, if we're starting to see these red bars to the downside, then that means the market is pressing its foot to the pedal, but is doing so in a downwards direction, right? The car is turning right and we're pressing gas downside, right? So we're pressing that downside. I'm looking for more bearish trades. I'm looking for more downside, maybe rejections, maybe breakouts or breakdowns for price to kind of maybe even a breakdown or maybe a retest or a lower high. Anything that tells me pretty much that market or prices are moving in the downwards direction. I'm looking to see if we get these red histograms, right? And if it's yellow, still looking for short trades, but a little bit more cautious just because market is still trying to push down, but it's still letting its foot off the gas, right? And I'm pretty much looking for confluence across the multiple time frames. So I need to see, again, the 50-minute needs to be pushing up with the 5-minute, with the 2-minute. Then I'll be looking for those long trades, right? And if we're seeing for down trades, I need to see kind of red bars come on the 50-minute, come on the 5-minute, and also on the 2-minute time frame as well, because then that's giving me that strong indication from multiple time frame perspective that the market is pushing lower, right? And another really good indication with these TTM is the strength of the bars, right? If you're starting to see, heavy bars to the upside with strong volume, right? We're starting to see that strength, then that could be a stronger indication that, buyers are coming in. If we're starting to see strong bars to the downside, that could be a stronger indication that sellers are coming in. And if we're kind of seeing a weakness of these bars, we're not really seeing much movement, and we're kind of seeing kind of these red dots form, then that shows very squeezing action, very range bound action, right? You can see here, when price was kind of giving us these red bars, we were kind of seeing that weakness in momentum. We were getting closer to that zero marker. You can see that we weren't getting much range in price, right? We're getting very tight action, very sideways. You could look for possibly rejections or very much range bound, playing rejection off tops or bounces off the bottom. Stuff like that would play out in very tight squeezed action, right? So very good indication of momentum. Pretty much, again, the analogy going back to the car, is market putting its foot on the pedal, right? If it is, look for those trades in that direction. If it's not, we're going to get much more range bound action. The car is just going to be idle, pushing sideways. Okay, so that is pretty much what I use on my charts, right? Again, I don't like to use this is a lot of indicators, again, depending on your psychology, depending on your own personality. Some people could look at this and be like, this is just way too much. Like, I'm using, VWAP swings, I'm using order blocks, like all this is just too complicated. And they simplify it just to using price action, right? And just very few concepts of support and resistance. That could be enough for somebody. But for me, I like to use this stuff because it just gives me that confidence, right? When I see a lot of stuff in Confluence, because I back tested it, because I've studied it, because I've seen it on a day-to-day basis, it work out, then I have confidence in it that it will continue to play in that way, right? And always changing up, right? Sometimes the market isn't always linear. It doesn't always act the same all the time. You do have to kind of adopt to new strategies as well. Sometimes, depending on the type of market, depending on the environment, you'll see different types of price action. So sometimes the strategy doesn't work out, right? A lot of the OG members that are with us right now will know that the strategy that we're using now is completely different from what I was using about a year ago or 2 years ago, right? A lot of concepts that I've learned throughout the years, I've slowly started to apply into my strategies, apply to my trading. So it does always change, right? And I mentioned kind of in the psychology class last week that we're always learning, right? If you want to be a trader, you got to actually have passion for it. You always got to be passionate about studying, what the next indicator, what this is telling me. And yeah, so always learning new, always applying it to the charts, right? It's only recently since I started using like key moving average, like the 10-day, 21-day on the daily charts to kind of get that perspective of what the overall market is doing, right? So always learning, always applying different concepts. And again, this group, as well as there's so many resources online that can, now give you the opportunity to learn. Okay, so that is just a bit about the day trading. Market internals, I don't really talk about. Market internals I also use as kind of my conviction to determine where that strength is in the market. I don't know, do you guys want me to just go over market internals? There is a really good video. Again, if you are a member, check out the Getting Started channel at the top. There are some videos there as well going into more concepts about how I use this kind of stuff, like how I use the order blocks, how I use price action on the entry exit video. There's also that demand supply zone video that tells you guys pretty much how I determine the order blocks. There's also the market internals video, which pretty much goes on how I use these different things. But I use the market internals here just to really determine the conviction in the market, right? Because we're trading major indices, we're trading the ES, we're trading the NASDAQ. So the NASDAQ and the ES, all they are is a portfolio of stocks, right? Your S&P 500 is your largest 500 mega market cap companies. Again, companies that you've probably heard of, like McDonald's, like Coca-Cola, like your Tesla, your Nvidia. You got your NASDAQ, which is your major heavy tech-based companies like your Nvidias, your cloud space, your cloud All your AI, your technology companies are encompassed in the NASDAQ, right? So all they are is major portfolios. So what the internals tell me is pretty much how those stocks in those portfolios as a whole is operating, right? The tick indicator tells me as a whole which direction are they moving? Are they moving upwards or downwards direction? ADD tells me pretty much are the stocks red or green? You know, where is that strength? If it's, you know, negative, looking for downside trades. If it's positive, looking for upside trades. And volume difference pretty much tells me where's that volume coming in, right? Is more volume coming in the upwards direction, or is it coming in the downwards direction, or is there no volume at all, right? Kind of in this past week, we've been seeing a lot of this volume difference just nesting around that zero marker, indicating the choppy kind of intraday chop action that we have been seeing, right? We've been in a pretty strong daily balance range here for the past couple of days, and Friday we did attempt to break out, but we'll see, how the day plays. But we've been seeing on the volume difference that we haven't really seen so much strong volume, and that's kind of leading to very range bound action, right? Typically, if you see a lot of down volume coming in that trend, you're looking for short trades. If you're seeing strong up volume, you're looking for those long trades, right? So it's kind of just a quick breakdown of how using internals, but again, we'll have to like a whole other class based on how they mean. But if you are a member, that video is available in the Getting Started channel if you guys want to check it out. You guys can always also DM me if you guys want to go into more detail, but don't want to talk in the group. You guys can always just DM me. We can always do a one-on-one as well, going over some of these concepts. Okay. So that is pretty much the charts and how I use them for day trading, right? So looking at the specific price action, looking at the candlestick structure on the 5-minute, 50-minute time frame. Are we coming near a specific point? The swing high, swing low, the VWAP. Are we coming near order blocks, the demand zones, supply zones? Are we coming into those time levels like the London high, London low, the overnight high, overnight low? And once we get there, what is the TTM telling me? Is there momentum? What is the internals telling me? Is there conviction? Which way is it pointing at? And then that gives me, strength for my entry. I also forgot to mention UVXY. So again, UVXY I also have here on the main screen, and that's just a volatility indicator, right? Like the rate of change in price. Typically, how we use UVXY is pretty much kind of opposite as it works inverted to price action, right? Typically, when you have moments of high volatility, when price action is changing hands very quickly, then there tends to be changing price action very quickly, then there tends to be a downwards movement price. When UVXY tends to be dropping, then there tends to be an upward movement price, because price theoretically just moves up slower than it moves down. Gerson, how I use the money profile? Yeah, so we'll talk about that now in a bit. Money profile I mainly use for my swing trading, right? So yeah, swing trading we'll talk about as well. So how I use the charts for swing trading. So that was pretty much, before I jump into swing trading, was there any questions about how I use the charts for day trading or anything about the concepts that we went over? No? Okay, so cool. We'll dive into swing trading. So yeah, swing trading, pretty much, again, first the stock has to meet our checklist, right? So for swing trading, the one example I'm using is HUD here. Again, HUD, absolute monster play, right? So for swing trading, just put on the right. So for swing trading, the first thing, it does have to meet our fundamental requirements, right? So for me, again, I follow the Mark Minervini concept now. So I need to see, strong earnings growth. I want to see acceleration in that earnings. If you guys follow the CanSlim, right, you got to have over 25% year-over-year growth on the revenues, on those earnings. We need to see it accelerating in the past 3 quarters, right? If you're just looking at IBD, right, it needs to meet that APS requirement of being over 80, right? Does it have a good return on equity over that 17%? What's the debt to equity ratio, right? Just basically looking at the core fundamentals, right? And then that kind of gives you, okay, once it meets those requirements, we're looking for that trade, right? Sometimes also, we also can kind of ignore the fundamentals if we see a strong technical setup and if there's a good story, right? Like that's how we call Rocket Lab, that's how we call Oklo, right? A lot of your high risk growth names that are just getting positive qualitative headwinds, from the political landscape, right? Those Trump favored stocks seem to be doing pretty well. So sometimes looking at those concepts, that could also give us interest for that swing trading, right? So once you have that sort of qualitative reason, or that, that qualitative or that fundamental reason, then you're looking at your charts for that entry, for the exit, right? And the main way I look for it is I look to see if price is basing or kind of giving us that, setup for that entry. Is it developing a cup and handle? Is it giving us a W pattern? Is it giving us a box setup, right? Look, some of those common patterns that are used. And then, or is it giving us some tightening action, right? Is price action, getting us some sort of base? Are we seeing kind of consecutive lower highs and higher lows, showing that price is tightening in a range to then give us that breakout play? And then is that breakout happening with strong volume, right? All that is just looking at the charts to identify, see where that breakout takes place, right? So we can run down this example here on HUD on pretty much what we used on the chart, right? So on the HUD, pretty much, so patterns is one thing, right? Looking at that, looking at volume is another thing, right? So for volume, whenever we see kind of supply and demand, what we're looking for is I'm looking at two things. I'm looking at these volume bars on the downside here, and I'm using the algo snipe money profile, right? So both these indicators are a good way to determine pretty much if there's supply and demand in the market. And what I'm looking to see is, inside that consolidation, in that tightening price action, right, that's happening, or in that pattern that's developing, is there signs of accumulation taking place, or is there signs of distribution taking place, right? And how I identify that is by looking at these volume bars. So let's say, for example, here we had on HUD, right, we got this cup and handle set up, right? The qualitative factor that we were looking at behind this play was that they just had really good earnings, right? They had projected strong revenue growth. They had reported higher than expected user growth, right? So that's really good if it's coming off earnings, and if you're seeing this really strong fundamental case for their bottom and top line increasing and sustaining that increase, then that's a really good factor there. So we got that good qualitative, we got that good fundamental. Looking at the price action, it was kind of consolidating in this range, and in this range you could see that there were more signs that we got this kind of one heavy sell day, but it kind of held, and then we kind of seeing above average volume, right? So we were seeing kind of more consecutive days where we were seeing that green days than red days. We were seeing in that range, more signs of accumulation. And if I kind of just replay the chart here as well, so I'll just go back to what it was looking like before that breakout, right? On the money profile, we were seeing more signs of accumulation here as well, right? So how the money profile pretty much works is that it looks at the different price levels, and in that price level, it determines if there's more buy orders or there's sell orders, right? So if there's more buy orders than there's sell orders, then it'll print a kind of a green on the side here. If there's more sell orders, then it'll print a red on the side here, right? So here on HUD, before we got that breakout, right, we were seeing that there were a lot more signs of buying going on in these price points inside this accumulation, right? There was more signs of that buying. There was heavier buying volume coming in, and we're getting these green candles, these green kind of bars here representing that, right? The yellow on the side here shows in terms of the entire price action, like on the entire scale here, where the most volume was traded, right? So in this case, around 42, 40 was where the most volume was traded. And you see that was kind of coming off those earnings, kind of coming off these gap levels as well, right? So that could have been also a strong indication that we're seeing accumulation here at these price points, right? Heavy buying coming in, and the point of control where the most volume is being traded, we're seeing buying volume coming in, right? So that's pretty much. What's my money profile? I just use the default, so I don't change it. Whatever the default settings are, that's what I keep it at, right? So I just keep it at the default settings, right? That's what I kind of found to use best. So pretty much, so going back to it, so when I see inside that money profile, okay, heavy signs of accumulation here, then that's showing me that that price inside that consolidation is accumulating. That gives me more confidence for that breakout play. So then when we see that breakout above, that prior high, wherever that pattern is set up, here this was a double bottom, and then we got an extended handle. So I was marking the high of that candle, which is 51.30, and then we got that breakout with volume, which gave us that indication for that entry, right? But when I'm looking at the money profile, what I'm looking to see here on these volume bars, again, is that signs of accumulation or that distribution, right? So here we're getting some good signs of accumulation. I don't know if I have any examples. One good example of another good sign of accumulation that I'm seeing in the stock setup at the moment is this INTZ company, right? And pretty much the same concept here, right? We're getting kind of a nice cup and handle, and inside this base setup, we're kind of seeing more signs of accumulation here than distribution, and we're seeing a lot more buying coming on the money profile. So this is giving me good signs that this could be kind of that fuel, the rocket fuel being put into the market, giving it that ability to give us that launch pad, right? And what we're looking for then is, okay, heavy demand coming in, heavy accumulation, where is that thin level of overhead supply, right? And if we kind of mark here on this volume, I'll be marking this recent high, all right, so this is that thin level. So now on this company, I'll be looking to see, okay, in this consolidation, if we get that break above 264, because we're seeing good accumulation on the money profile, because we're seeing good accumulation here on these volume bars, then I'm looking for that breakout to the upside, right? And also just on this, on the volume bar here, while we're talking about supply and demand, I kind of put the 10-week moving average here. So I put the 10-week volume average on these price, because that determines when I'm looking for that above average volume to come in, as well look for that entry, right? So not only looking for to see if we got a break here, but volume is relatively weak, it's still underneath its average, the average 547K, then that doesn't give me the strong conviction that, buyers are coming in, that institutions are coming in, right? So I need to see that breakout take place with that above average volume, right? So if we go back to kind of HUD, you can see that we kind of had that breakout here as well, right? So if we kind of do that replay, I'll go back to 6681. So this was another good example, right, where we had that breakout, and even afterwards, we weren't really seeing any sort of heavy distribution come in, right? We had one day where we kind of saw that selling come in, where it could have been, maybe some profit taking, as it was a pretty strong breakout, but there was really no strong follow-up, right? We were even seeing more, as price was kind of accumulating in this sort of next base setup, we were getting some heavy accumulation as well, right? So kind of looking at the volume during the breakout, or during kind of the higher low, that stage breakout analysis, you're not really too concerned with the money profile, right? Not really too concerned what's happening here prior, but looking to see what's happening when it bases. So when it's basing, when it's accumulating, or sorry, when it's consolidating, is it accumulating? Is it distributing, right? So in this case, looking at this setup here, we had another cup, and we got a handle, right? We got at this prior high, which was a 66.91, looking for that breakout. Well, okay, what's happening inside this base, right? Inside this base, we're kind of getting below average volume, so not really seeing much strength there. Volume is starting to kind of pick up here as well, but on the money profile, it's showing us that it's accumulating, so it's still good signs for up, right? It's not the strongest signal, right, as we were getting down here, but it's still pretty good. It's not bearish, but it's still holding up pretty bullish. And I'll talk about the moving average as well, but it's still holding about some key averages, right? So we can look for that breakout, and then if we kind of just forward here, then we got that breakout, and volume was starting to pick up, right? So it got pretty tight here on these two candlesticks, and then it started to kind of rebound as we were bouncing off that 10-day, and that could have been your entry to the upside, right? So you could have entered even on this candle or this candle, and you would have caught a pretty nice move, right? It started to kind of continue the whole of the 10-day, and it just kind of kept rocking shit to the upside, right? So that could have been your plays, right? Just looking at the money profile here, again, not too much concerned what's happening in the base, but if you're looking at this box setup, you could still see that we're still seeing good buying coming in on the profile, leading us to strength, or just more confidence or conviction for us to keep hold of that trade, right? Not selling it, unlike me, which kind of sold it into that return, right? If hindsight being 2020, if I was a bit more experienced, would have kind of held that 10-day, would have held it to this chop, it would have got a pretty nice move as HUD just kept on going, right? As we know now, it's still hitting all-time highs and hitting that 110 marker. Absolute amazing move here on HUD, right? And not only HUD, like a lot of names, even Credo, you could see similar setups, right? We were kind of seeing that break. If we kind of go back to when we got that move, let's select bar, right? So this is another good example, right? So here on Credo, we had an area where while that price was basing, we were getting some nice consolidation here in that setup, right? We're getting kind of in the point of control, a lot more buying coming in, heavier signs of accumulation, and then we got that breakout here. But on Credo, we could have saw there was also a bit of overhead supply, right? So in this case, when you're seeing this kind of overhead supply above wherever your current base or your entry is, you want to enter kind of above that, right? You don't want to be caught up too much in that overhead supply, because that could be an area where sellers start to step in once again, right? But as we were kind of seeing price take place, we were kind of seeing that supply continue to weaken, right? We kind of got a breakout here, and then that breakout wasn't that strong because the demand had to wipe away at that overhead supply, clearing kind of space on the clear upside for that breakout, right? For, again, if you guys follow market making concepts, in those bases, you're looking to see where that thin overhead supply is, where that thin structure is of resistance, and you're looking for that breakout to take place above, right? So you can see that as we were kind of seeing these volume bars go on, we were kind of seeing the supply weaken, and then we got a nice break to the upside, right? And then it's going to be a good entry. Again, mentioning that 77 was a bit more the aggressive entry due to that supply, and then 86.93 was a bit more conservative due to, again, us now seeing that supply weaken here, and we were seeing that buying pressure come in on these volume bars, right? So just looking at real time, where that volume is coming in, heavy accumulation now coming in at this price point, leading to a very nice sustained breakout, right? And this was a pretty nice move here on Credo as well. So it would have been nice there. Again, I sold pretty early. Again, locking in those gains, got, wiped on. I think this was the day that that Trump had announced that there was no negotiations with Canada because of that digital service tax. So then I kind of panic sold into that news, thinking that, because markets were extended, that we were gonna get that bit of the downside. But it ended up not happening, as again on Sunday, Carney had just removed the digital tax and markets resumed back towards upside. So lesson learned there as well, but really nice. You can see how the entry was a really good entry based off those supply demand characteristics, right? So good technical setup. We were forming that base. We were getting that accumulation and that consolidation in price. And then on the money profile and on the volume bars, we were seeing that volume come in. We were seeing that accumulation. And on that breakout, we got that above average volume that then signified that push higher, right? So a good move there. And then once in a trade, or even looking for a trade, the moving averages are also heavily used, right? Not only by me, but a lot of traders use it, right? I'm pretty sure, again, if you guys are watching the Traderline conference, pretty much every trader that I've seen so far uses the moving average in some sort of capacity, right? They mainly use kind of the 50-day, the 200-day are key averages that they use. They also use like the 10-day or the 10-week average as well. And if you're kind of wondering, what's the difference between the 50-day and the 10-week average? Like they both represent the same time frame, right? 10 weeks is pretty much 50 days. It's pretty much the calculation of the candle, right? Sometimes you'll see it very similar, but it determines on, what set of data points it's using. If you're using the weekly, like say the 10-week, then that 10-week is only going to update once that week comes to a close, right? So at the end of the week is then when the average updates and when you're going to see kind of that line move. And if you're using the 50-day, it's on a daily basis, right? So every day, it removes the last 50th day and then puts on the newest 50th day. So it does a different, it calculates as a different line, right? So pretty much what these moving averages are is that they take pretty much past price action and they determine the average price traded within that set time, right? So the 50-day will take the previous 50 days, what's the average price, and it'll develop this horizontal line, this kind of smooth average line. Then you have the 200-day, which takes the past 200 days, determines the average, puts on the line, right? There's kind of two types of moving averages. There's the exponential moving average, and then there's the SMA, the simple moving average. Depending on what you want to use them for, I like to use, again, for my trading, I use the 50-day simple moving average and the 200-day simple moving average because I find it helps determine that longer term trend, and it also acts as a stronger area of support and resistance. And then for kind of the intraday moves and for the short term, I like to use the EMA because the exponential, it reacts a lot more to price, right? So a lot more volatile, and with the way price action moves now, it is a lot more volatile, so it encompasses, at least for me, better action. So I like to use key averages again that I use is the 10-day EMA, the 21-day EMA, and then I use the 50-day SMA and the 200-day SMA as well, right? And how I use this is pretty much determining trend, right? So I use them pretty much similar concepts. Again, I learned it off of Mark Minervini. I also learned about a lot from all these different IBD traders, but pretty much in determining up that trend, right? I only look at stocks if it's above that 200-day, if it's above that 50-day. If it's, the 10-day, 21-day, not that important. Sometimes you could see, if it's kind of just wicking underneath the 10-day or the 21-day, maybe looking for reversal there. But if it needs to be above that 50-day, it needs to be above that 200-day in order to confirm an uptrend for me. So that's kind of how I use those key averages. And then once in the trade, I'll use the 10-day and the 21-day kind of as my stop loss, right? Pretty much where I use as kind of my risk. So as long as, now price is holding above that 10-day, then I'll keep in the position, right? And again, I do apply the concept now, but if I applied it when I first started trading, you can see that a lot of these names would have been pretty good, right? Credo, for example, when you got that entry, would have held above that 10-day here, right? No strong close below it. Could have held for this move. If you looked at HUD here, once we got that break, just holding above that 10-day on this entire move to the upside would have been a good indication to kind of continuously hold there as well. Palantir, and a bit more volatile, but still holding those key averages at the 10-day. A lot of traders also just use that 50-day as a key average. CLS, Celestica, was another good example. We caught a nice entry, right? If you kind of zoom in, going back about supply and demand, right? In this area, just a lot of heavy signs of that accumulation, right? More volume bars where we're seeing above average buying volume. And then on that breakout, we're kind of seeing heavy accumulation coming in, right? So a lot more green than red here at these price points, leading to a very strong move to the upside, but then just also holding that 10-day the entire way up, right? So there's the key average there, right? And just some other concepts, again, involving these averages. If you look at the 50-day and the 200-day, kind of the golden cross or the death cross, right? So if I just mentioned, if we kind of pull up the SPX here, right? So this is a good example of where we kind of got a golden cross opportunity where you have the 50-day slowly creeping its way to the upside, starting to point its head to the, in the upwards direction. And then as soon as it breaks above that 200-day moving average here, that's called a golden cross, meaning that there's more trend more likely for the price to move higher. Sometimes even the positioning of these moving averages, right? The 50-day being above the 200-day is also a stronger indication of possible uptrend. You're looking more favorably for that longer trades, right? And then example here, we got the death cross where price was kind of downtrending. The 50-day crossed below that 200-day, and then we started to see kind of a strong indication of price starting to move in the downwards direction, right? Trend is still a bit more bearish, looking more for those short trades, maybe holding a little bit less to your long trades there, right? So now just as revolving the 50-day, the 200-day, there's so many different types of theories out there. Again, it really comes down to not really so much how what it means. Like, I mean, if you're a huge fan of math, I am not, but if you are, if you really like the math, the calculations, if that really helps me understand it, then you can dive a little bit more into, okay, what is the math or what's the difference between the exponential and the smoothing, and maybe that could give you a better understanding of it. But for me, again, just applying it to the charts, seeing how price reacts to it, identifying those common patterns, and then applying that to my strategy and to my setup, right? Applying it to basically my rule set to determine what my entry and my exit is going to be, right? Okay, so that is pretty much, again, swing trading. The pretty simple concept. Again, identifying the bases, what's being set up in that consolidation pattern. Is it accumulation? Is it distribution? And where pretty much price is relative to those key averages. And then just like, again, having strong fundamentals, that qualitative, gives me that bit of peace of mind that, okay, this is a pretty strong company that we're looking at, right? Okay. And again, for swing trading, I'll mainly use the weekly and the daily time frames to determine what the longer term trend is, and then my entries will be based off the 4 hour or the hourly to determine basically on an intraday perspective, okay, are we getting that breakout? Is it happening with strong volume, right? And if you guys remember, again, we go through a lot of examples. Again, in the research channel, I'm going to upload some stocks today as well that I've been looking at. In the research channel, we kind of share continuously, like, different types of setups and a lot of examples there. And then also, all these trades, how they're playing as well. Got a lot of good trades these past couple months. Again, not just from from setups that I've been showing, but a lot of traders in the member section are doing pretty well here in the group. So again, very simple concepts. So that is, again, pretty much it, guys. So again, these are just pretty much how I use charts, right? Again, I do think technical analysis is very important in if you want to be a trader now, just because of how easily and openly available it is, right? I'm seeing a lot of traders, that could trade based solely off of charts, just by looking at the candlesticks, right? But it is definitely, no matter what type of trading you're doing, whether swing trading or intraday trading, they definitely do come. It is a very useful tool. Okay, so that's pretty much everything that I want to talk about and some of the concepts that I use. If you guys have any questions, I'd be happy to take them. If there's some other topics that I didn't go over that you want to go over that that I might know, I do know a little bit about like Ichimoku clouds, how you use fair value gaps, Fibonacci retracement, stuff like that. But I don't really use that too frequently in my trading. Gerstmann, doesn't make much difference with 1 or 2 days up or down if we use 8 EMA or 10 EMA. I've seen most. Yeah, I mean, it doesn't make a difference. And again, a lot of different types of strategies out there, right? If you use the 8 EMA and you find that that's what works well for you, then definitely apply that to your strategy, right? For me, I find the 10-day and the 21-day works well, so that's why I apply it to my strategy. It doesn't make too much of a difference. You'll see maybe a slight price discrepancy. Again, you're not really encompassing too much different data, just 2 more days of additional data points, right? But again, just depends on your own. If you find that the 8 MEA works well and you kind of tested it and you're finding that, it is working well for your trending stocks, then yeah, definitely apply it, right? There's so many different types of strategies out there. I know a lot of traders that also trade kind of just on an intraday basis, right? Looking for day trades. They'll just use the 9-day EMA on their charts as well, right? And they'll look at just to see when the 9 crosses the 21, then they'll look for trades based off that. There's so many different types of strategies. I bet if you can search on YouTube, to search a moving average strategy, you'll find thousands of videos of different ways to use it. But yeah, if you find the 8 EMA works, that's definitely fine. It doesn't make too much of a difference, right? You're just encompassing more data. It just depends. Say you have one day where you had a huge jump up in price and a huge trend, then you might see that difference between the 10-day or the 8-day EMA. But again, it wouldn't be too different. The session will be recorded, so I am recording. Hopefully it recorded well. Again, sorry guys, I am using a new setup here, so a lot of difficulties. I did create a direct internet connection, so hopefully it's not lagging off. I know we were kind of in a live stream on the Thursday Friday session. It was kind of lagging out a bit, but should be working smoothly now. So I I do hope the recording also, I was having some trouble with OBS prior to the recording, but hopefully it did record. But we do these sessions often. Again, a lot of the concepts, Dave, that we already talked about. I know you've been a member for us. You're one of the OG members, so you probably heard kind of the same stuff that we talked about a couple times here. But if you ever do miss it, you ever want to refresh it, also in the Getting Started channel at the top of the Discord, there's also a lot of videos there as well. Pretty much going over demand zones, supply zones, market internals, entry exit. So yeah, not much has changed. Let's take a look at some stocks. BLNK, Blink Charging. Okay. So again, just reading off technicals. Again, this isn't something that I would look at, right? Just because looking at the charts, we're still below that 200-day. And also, just looking at the price here, right? We're kind of dealing with a penny stock, it seems like. So I don't typically like to trade penny stocks. I at least want to see like at least above that $5 marker, right? It doesn't have to be too crazy, right? Even sometimes you guys know we trade ASM, which is under that $5. But when it's like kind of a penny stock, it's just very high risk, right? So that alone kind of would keep me off the chart, but also we're kind of still below that 200-day moving average, so there's no clear defined uptrend. You do have possibly a short-term turnaround situation as it is developing a inverse head and shoulders. You have a left shoulder, you have a head forming here, and then you have a right shoulder that is above the key averages. So your neckline for this would be kind of this area here if you're a bit more conservative, about that $1 111 marker. So you can potentially look for a inverted head and shoulders here if you do believe in the company, right? So let's say the company Blink Charging has a good story, maybe they undergo a new management, and there's some fundamental change that's happening within the company that you then believe that it could turn around, then maybe you could keep it on the chart. But purely technical wise, it being below that 200-day, it being kind of just early developing these patterns isn't something that I would look at, right? But keep an eye on it. Also, just not seeing much accumulation, right? So this is a sign of we're seeing possible more distribution happening than that accumulation, because we're not really seeing strong volume on this base setup, and in this consolidation, there's heavier signs of selling coming in than that buying coming in. So the only way that I would see this go up is, again, if you see a heavy news-based reaction, it reclaims that 200-day. Does it have some sort of positive headwinds come in, and do these stops get triggered, these sellers become buyers, and then we get a parabolic move up? But that scenario alone is, again, just very high risk, and I don't really see it working out too many times, right? So, but pretty nice inverted head and shoulders. Maybe if I look a bit qualitative, you can see a turnaround. But again, don't want to force any trades. If it does reclaim that 200-day, man, keep it on the watch list, and it starts to form a bit more accumulation, definitely could look into it. Spain Deep MRP. So MRP, recent IPO, so not too much information on the charts, but looking pretty good here on this breakout. I mean, it's establishing an uptrend. It did defend that 50-day here, so nice uptrend here, hitting all-time highs. So this example where a stock has already broken out, right? It already broke out, it pushed up here. This would have been a nice base setup here on this move as we got pretty nice accumulation. Again, it being kind of a recent IPO, don't have a large enough data set to develop the money profile, so you can zoom in on some of these other time frames here, right? So this has been a good example of a breakout that took place here prior, because in this area, we were seeing kind of heavier signs of accumulation taking place. So already a nice breakout. So if you're holding this one, I would say it looks like from the chart still being a hold, still holding above that 10-day, still above that 21-day, making a nice push up. But what I add here, kind of risky, right? Because also always keep thinking about in terms of your risk reward, right? If sorry, I think someone's mic may be open. Okay, sorry, I didn't catch who that was, but sorry guys, just keep your mic muted. It's open. Like if you guys want to like hop in, like anytime ask a question, that'd be cool. But like sometimes it can get distracting, or sometimes you don't realize that the mic is open and can hear your personal conversation. So rule of thumb, just keep it muted. But again, feel free to open up anytime you guys have questions. But yeah, so this one, another example where if you're holding, this would be a hold. It's a nice breakout play. It is moving nicely from this kind of consolidated base. But if not, want to see that next setup, right? If it continues to hold that 10-day, if it can hold above that 50-day, if it can consolidate in this range, then look to see, where that next, if we get that accumulation in that range, then look to see where that next breakout opportunity play. But pretty strong company. I mean, if you're holding, nicely done. This is a pretty good move to the upside. Near all-time highs though, just a bit risky to add, right? And thinking of kind of that risk reward, this would be a nice area to add that risk reward, because you got a nice breakout. You can put your kind of average, you can put your stop like below those key averages, looking for a nice move to the upside. Would it give you already, if you kind of played this move, would it give you that about 3 to 1, about 2.86 there? But here, if you're thinking about your risk to reward, right, it's a lot riskier, right? You're at all-time highs, so you need to see continuous demand coming in, and your stop would be kind of below these averages, right? So you have to be able, you would have to also place kind of a wider stop for a very limited potential move. Okay. But yeah, I do like this company. I think real estate is kind of getting a bump up lately. It is kind of pushing up. So yeah, if you did catch us early, nice move here. But recent IPO, give it some more time. We'll see if it continues to base. Let's take a look at the weekly. Yeah, so again, this would have been a nice move here, but now it's already giving you that breakout, right? So you need to see where that next sort of consolidation takes place. Let's take a look at ARM. Yeah, ARM, UK-based semiconductor here. Again, has been kind of lagging in terms of the general space. A lot of upside coming in the semis. Again, semi SMH, your NVIDIA all-time highs have been what's leading the markets here as of late. I should also preface this, guys. Again, none of this is financial advice. Again, trading is very important, right? Play your own risk accordingly. Again, we can't really provide any advice, but I can give you guys pretty much what I'm seeing on the charts, right? Purely technical basis. I'm not saying it works 100% of the time. That's why it's always important to also have your risk management, have your stop loss, have your own trading framework, right? If you only, again, solely go based off what other people say, then that's all you become reliant on, and you can't really sort of get any sort of confidence in your trade, right? That's why fear takes place, right? If you don't have confidence in your own setup, you're relying on someone else, then it leads you to make a lot of common mistakes based around emotion. So always make the trade your own. Again, I don't mind, going over these stocks and sharing my perspective on my viewpoint, but just note that that's not the sole reason to get into a trade, okay? Make sure you guys do your own due diligence. So looking at ARM, I do like the setup here on ARM. It is setting into a kind of a giant cup and handle setup, but the only reason I don't like is that it is a bit risky due to how deep this handle is, right? So if I look at the price range going from kind of the top to the bottom, we kind of got about a 16% range here on this handle, but it is holding up pretty nicely, right? We're seeing a lot more accumulation on the money profile. It is above the key averages. You got the 50 above the 200-day. We are getting some signs of accumulation here as well. So we'll see if it continues to hold up inside this range. If ARM we can hold kind of this 151, 149, let's see if price can try to give us a breakout above 168 to then test 182, potentially make a move towards that all-time high, back above towards a 190. But I am liking ARM. It is kind of lagging in the semi space, but I think it needs some sort of catalyst. Not really seeing too many developments. Again, the only news that it had was way back when NVIDIA was thinking of acquiring ARM, but then that got shut down due to, again, monopoly concerns at the time, right? ARM also shut down the purchase here. So we'll see what happens. A nice push up here in this week above the 10-day, above the 21-day. If it can give us a hold above and we can see a higher low, potentially some tightening, then we'll see if we get that breakout above this 168 level for that breakup. But again, just a bit deep on the handle, makes it a bit concerning. They kind of give an aggressive entry as well, breaking that downtrend. But again, just very risky as long as it's kind of inside this box. AMSC also liking this name here. American Semiconductor name, also pushing up nicely. We'll see if this one continues. AMSC still holding that 10-day, gave a nice breakout from this cup and handle as well. You can also see a really nice setup where we got kind of a deep handle, heavy accumulation, and then we got that breakup with volume as we were seeing accumulation here on the money profile. So since then, a nice move here, still continue to hold that 10-day, making new all-time highs. So I mean, if you're still holding, there's still no signs of distribution coming in, right? We're still seeing on the money profile, even at these price points, accumulation coming in around that 42, 41 marker, still holding above that 10-day, still seeing decent accumulation as well. So if you're still holding, there's still no reason to sell. But again, just managing position now, right? Would you add at these price points? Again, difficult to say as we've already had such a strong run up. And also looking at the overall market structure, right? If you take a look at where we are positioned in the general markets right now, we're kind of in the late stages of this rally, right? And it's kind of crazy. It's been kind of a V-shaped move, right? Since April, right? April 22nd, we got a gap up, kind of pushed up from this double bottom, continued May 12th, continued that push up once we got, positive talks between US and China. And then we kind of continued that push up here late June due to the ceasefire announcement, right? So kind of been a very parabolic rally here. And now we're kind of in the late stages of this kind of push up. So it's kind of a bit concerning. Again, I'll talk more about this. If you guys are a member, I will share it in the weekly outlook. in the market of this channel, but we are kind of, still on this parabolic move here in kind of the late end stages of this rally. So a lot of these names, a lot of your semiconductor names that have been leading, like AMSC, like AMD, like NVIDIA, they're kind of a bit difficult to kind of get in at these price points, right? Because they're kind of hitting these highs and they're already kind of extended from these breakouts, right? Also, another key rule of thumb you can use the moving averages is to see how extended prices from those averages, right? So really good kind of where I learned the strategy was from Oliver Kill. So if you guys want to check out Trader Line videos, just search up Trader Line Oliver Kill, and then I think in one of his conferences, I think he did it back in 2020 in the annual conference, he kind of talks about these moving averages as well, and I kind of adopted from him. His strategy is that when prices are extended from these key averages, that's where you're looking to kind of either sell, close your position, or you're looking for that next sort of consolidated base setup, right? So here on AMSC, if we take a look from its 50-day, we're kind of extended, right? We're above 30% now from that 50-day moving average. So if you're holding, this will be a good area where you want to either lock in those gains or where you want to move your stops up, practice your own risk accordingly, right? Another stock kind of extended here is NVIDIA, right? If you take a look at NVIDIA, kind of extended from that 21-day, right? Actually, not that extended here, kind of has been softened up, but the 50-day for sure, right? So we're kind of extended from these averages now. So either looking for that pullback in some of these names or that consolidated base setup to give us that next entry. And if you're in it, looking just to manage your position, right? Not looking to add here as we are extended. We're kind of in those late stage rally, wanting to see kind of that bigger pullback take place in the market in order to kind of enter into some of these names. So that would be kind of the setup I'm looking for in AMSC. If you are in though, I mean, congratulations, it is running. So just continue to hold and manage your position. We'll see what prints tomorrow. Reddit, yeah, let's take a Reddit. Reddit also kind of has on a insane rally. So we'll see Reddit here. Yeah, so Reddit has also been kind of steadily just pushing up. A nice setup here as well on Reddit, kind of getting us a cup and handle as well here. What did I do that for? So nice cup setup here. Getting a bit of a handle right towards the 21-day, 10-day moving average. So this is actually a pretty decent setup as we're seeing kind of in this handle, more signs of accumulation. We're seeing more signs of accumulation take place here than distribution. You can see that the distribution, that the selling days are kind of just on below average volume. Money profile also kind of generally a bit mixed, but you're also seeing heavier signs of accumulation taking place here. Point of control, highest volume traded was heavy buying volume. Still seeing buying volume coming in here as well. But you do now have a bit overhead supply. So what you can watch for on this one, on Reddit, how we develop out of this cup pattern here. See what develops here early on with that 21-day to 10-day. If it does provide a strong boost, see then if we can get above this overhead supply at 167, could be potentially a nice entry point there as well. So early on, see if we break this downtrend. If it does continue to hold on oncoming days, we'll see if we get above average volume. Could look for an aggressive entry here in this handle, as it is kind of developing kind of as a mid-level cheap pattern as well. But a more conservative entry would be as if we break above this 167 overhead supply, and then we could see push back up. You do have some weak volume on these above average prices, and potentially even a gap fill up towards 200, 212. A really nice setup here on Reddit. I will add this to the watch list. But I want to see again a bit more development here on this handle. We'll see if it can continue to hold off of the Friday run up here. Okay. Cool. All right, so I did see a couple of you guys joined here a bit later. Again, this session is recorded. I will be posting it in the education channel maybe later today, so you guys can check it out. And if you guys ever have any questions, even after the recording, feel free to put it in the chat. I can pretty quick on answering. You can also send me a DM if you guys want as well, and we could, go over it one-on-one in more detail. But that's pretty much how I use charts, right? A lot of concepts here, a lot of different things that I picked up over the year, but just using all of it in confluence to give me that probability setup, right? Want to see conviction in the right direction, want to see momentum in the right direction, giving me that price action, giving me that entry. That's how I base off my day trades. And then for my, swing trades, looking to see, are we holding above the moving averages? Are we getting accumulation on the money profile and on these, on the volume bars? And then are we getting that breakout with that strong conviction, right? So a lot of different uses, but again, the charts are a very popular tool. All right, Tesla, yeah, let's take a look at Tesla. So Tesla looks pretty good as well from a daily perspective. So again, all these levels I will share with you guys, but a nice push up here. Tesla has been kind of holding above those key averages, getting a nice boost up off of this intraday support as well. So we'll see if it wants to continue. Yeah, typically Tesla does have that notion where it does run up into earnings, and they do have earnings I think this week on Wednesday or Thursday, I believe. Just loads. Yeah, Wednesday. So Wednesday this week we're gonna have earnings from Tesla. Again, Tesla has been pretty interesting. A lot of headlines in this past quarter. You know, this robo-taxi event launch being a failure, but then now being extended into San Francisco. You know, Elon getting all political, now anti-political. It's kind of hurting the stock over. You know what happens, and Tesla earnings are always interesting, right? Even last earnings we had negative earnings, negative revenue growth, negative earnings growth, but then Elon came out and inspired all this optimism, you know, pretty much saying that he's going to take a back stand on being so political, focus on the company, and then you had Tesla on a parabolic run to the upside off negative earnings, right? So Tesla is always a fun one to watch. It does set precedent towards the overall market as well, just because of how heavy positioned it is in the major indices. So it will be interesting to see how they report on the Wednesday session. It could particularly even be market moving depending on how surprising they come out. Also got Google reporting, I think, on Wednesday as well. But yeah, early on we'll see what Tesla does. If it can continue to hold those key averages, that 50-day, the 10-day EMA, we'll see if price can try to push up towards this upper daily return on resistance, right? So in this case, we kind of got this swing high here. We got a lower high and even a lower high. Connecting that, we kind of got this downtrend resistance, right? So typically when I draw my trend lines as well, I'm looking for 3 points. So it has to intersect with 3 points on the chart. For me, that just gives me a stronger area of resistance here. So this would be a strong area of resistance on Tesla. If we do get that push up, look for a move towards maybe 343, 359, and that gives us kind of a breakout where a trend could possibly want to resume back towards its all-time high level. If it kind of holds below here, we can kind of see a break below these key averages. Then I'll be looking for a push to the downside, possibly testing 288, 273. But I think, again, hard to predict what will happen. Again, never like to predict what earnings will do. You never know what's going to report, especially with Tesla. As I mentioned, they got negative earnings, but they still push to the upside after that earnings report due to Elon, right? So you never know what the company's going to report, what their future outlook's going to be, what the CEO is going to say until it happens. So typically around earnings, how I play it is I like to see after the fact, give the stock two to 3 days to just kind of settle down, and then see what it wants to do, right? If it's kind of giving us a strong bullish reaction, like we saw from Credo, like we saw from CLS, like we saw from HUD, where it was backed by a really strong report, like they had good fundamentals growing, then I could get back behind it, see if we're going to get a possible push to the upside, right? But it depends, you know, how the earnings come out, what they say. If there's, you know, kind of earnings releases where we're seeing kind of very mediocre returns, or if it's based off of, you know, cost cutting initiatives, nothing really long lasting, then that's a pretty weak report and not really looking to see, you know, a strong push up off of that in the oncoming or several days afterwards, right? So it really depends on what they report and how they report, and then off of that, you know, inferring on what markets want to do, right? Netflix, for example, had a strong report, reported last week, right? And off that, they're kind of seeing some weakness, right? They had pretty good earnings, but then you had the CEO come out and say that, you know, they're not really projecting good returns for the next quarter, for the next year, and they're having a fall in their operating margins, and now we're seeing this downside, right? So this could be pretty negative foreboding for the market, as Netflix is also a major part of the major indices, right? So if we're seeing some downside here in the first tech name to report, you know, we'll see how the other names set to report here as well on coming weeks. So again, Tesla will be pretty. I think Amazon will also be pretty interesting to see how they report this quarter, just due to, again, the Prime Day event taking place, a lot of these tariff-related news, and also Amazon is primed for a big move, right? Take a look at the daily, kind of setting up into this wedge pattern, right? A lot of accumulation coming in here on Amazon as well. So we'll see if it wants to give us that break towards highs, but it'll be interesting to see how they report. See when their report is. So July 31st. So pretty interesting day as well, right? July 30th, we're going to get the FOMC. Then on August 1st, we're going to get the tariff-related news. So could be a pretty interesting week here, as we got Amazon also reporting kind of in the midst of that. But yeah, yeah, it's definitely going to be interesting. Mark your calendars for that end of July. Yeah, Google's reporting, I think, Wednesday, right? Also, yeah, same thing. Got a nice kind of base setup here, even looking like a pretty good cup and handle, actually. And you have kind of this overhead gap, and you have a lot more accumulation happening above key averages. So Google also kind of one of those names that's kind of been lagging just due to its lack of news, right? A lot of the hype in markets recently have been due to AI, hyperscalers, semiconductors, that kind of stuff, and Google hasn't really shown any sort of strength in that space as of yet. So we'll see if how their earnings come out. If they do to kind of give some groundbreaking news, then they definitely could see that push up, that parabolic move. It is definitely set up for it, as we are seeing some accumulation here in this base as well. But we'll just see how they report. Apple will also be interesting. It is also kind of coiled, but kind of seeing the opposite, not really seeing heavy accumulation, a little bit more signs of distribution here on the hourly. So we'll see. Also kind of very coiled. The spring is loaded, but which way does it want to go? When is Apple? So Apple and Amazon both reporting July 31st. All right, Microsoft will also be interesting. Where they reporting? So July 30th. Again, Microsoft off their earnings is a parabolic move, right? So another name, they had good earnings, strong report on the top bottom line, and then just a good outlook, right? Announcing additional capex spending, and since then just a parabolic move. So it's an absolute rocket ship. Again, with these names, kind of share with members, but you're looking for that pullback, right? Want to see when that market corrects, and then see if we can try to get into a position with some of these names. All right. So is there any more questions, guys? Any more stocks you guys want to take a look at? If not, we'll end off the session there. Pretty good morning. Kind of went lengthy into the session here. So hopefully everyone found this to be a bit informative. And again, I will end the recording here now, and I will post it in the education.